All right. Good morning, everybody. CPI 8:30. Consumer sentiment 10 o'clock. And the rig count at 1. Having worked on those rigs for 20 years, I can tell you that it's very unlikely to have an impact on the market. We are not yet at the edge of the expected move. So as much as that move yesterday felt like we went a long ways, we didn't get to the end of it. Now, if you've been following along with the way that we've been talking about the analysis of this low, this move down sets the stage for a higher low. Now, we don't have a higher low yet. Because we haven't come up off of that low yet. But as long as it doesn't continue to go down and make a new low, then we will have ended up with a higher low. So that's a good thing. The lack of reciprocation already to the upside really highlights how important the CPI is today. Nobody is willing to commit. We stopped yesterday at the ADR, by the way. Today's ADR, half the move would be 40.70, call it 40.75, and 39.77, while a full ADR would be 41.22 and 39.29. It's that orange lower line right there that we found yesterday. It's where we stopped. We are range day. We are back inside the range. We were inside day breakout earlier today. Got that micro double bottom and came back in again. It's very likely that we're going to have a break back out to the downside if the news is bad. Now, when it comes to if the news is bad, bad is good or good is bad, or They haven't really quite broken that out yet. The weekly expected move does not change through the week. It is the way that we use it, set in stone. But it's based on these numbers. And if you wanted to use a updated one every day, you could also do that. But the weekly expected move that we use, looking at these lines, these are locked in place from last Friday and they do not move. Notice that next Friday's is already on the chart. Those will move today up and down with price, but once the end of the day comes, they're going to be locked into place, and that's it. They won't move. Should we begin some good news moves, the target will be back to the open. 41.11 would be after that. So you got 40.94, 41.11, which is the cog line, and then the ADR top side. Now remember, the ADR is the norm. So if it's really good news and we start making that break to the upside, it will move through this area relatively quickly. There's no real resistance there. That's why we moved through it that way so quickly. Because if you remember what I spoke about yesterday, you little demon child, got a hyper cat this morning. Kittens are fun until they're trying to chew your feet. What I spoke about yesterday here was that we were very likely to move through that area really fast if we broke down yesterday. Because there was nothing there to really catch us. And it should be the same thing thinking about it from the other direction, moving back up. There's nothing there for us to really hit against. This little bump was pretty much all that we had that might have been able to slow us down. And I mentioned it yesterday, but I did mention it wasn't worth much. And yeah, it wasn't worth anything. We went right through that. So it's very likely we're going to go right back through it again. I would almost be surprised that we haven't mean reverted yet, except that nobody wants to commit. Everybody wants the numbers first. But the way mean reversion works is very similar to a bungee cord. The farther you get out in an excessive speedy move, say a breakout or a breakdown from news or whatever, the faster you go out there and the farther you get, the faster and quicker you're likely to come back the other direction. We see it all the time. So it's all the CPI today, guys. No amount of technical analysis in the world is going to resolve that. Same thing with the NASDAQ. ADR half is 12.533. Full ADR to the top side is 12.732. To the downside, that's 12.135 and 11.935. So, without a whole lot to dig into here, knowing that we have the CPI that's going to be the real deal on this. I suppose we'll point out what I've been working on and we were talking about last night in the chat. It's a little bit relevant, I guess. It fits a little bit of what we're working on this morning. And that would be mechanical trades. Mechanical trades are not something new to what I've done before or what I've shared before. If you were to look on YouTube, you would see my other mechanical trade strategy, or at least one of them. Options Omega will be joining the Bullish Bears for a webinar on the 20th at 3 o'clock. And during that webinar, they're going to show people how to use their back testing product. I haven't been able to run a lot of my mechanical systems because they don't fit the current market environment that we're in. And since this is an unprecedented market environment, there is no history to look back and say, well, I should make these adjustments to it because this is what worked the last time we had these conditions. We've never had these conditions. So using that back tester, I was able to put into place one of my weekly expected move iron condors by figuring out how it would work in this environment, which is different than how we used to work it before these conditions. And it's working. It's good to go. I'm putting one on again this morning. It's going to be great. So the 20th, 3 o'clock, Options Omega will be at the Discord, and we'll give a walkthrough, a presentation of how their product works. After he does that, there will be afternoons where I come in and we're going to start rebuilding all of my mechanical systems and then checking to see how they work in the modern environment with the current conditions that we're in. Most of my mechanical systems never made it into the public. So we'll first have to explain what they are, do that kind of walkthrough, and then build them in such a way and back test them to make sure that any changes we're making will fit these conditions. So that sounds pretty cool. Really looking forward to that, but I'm not going to do any of that until after they present, right? You can go to Option Omega website and check them out. I wouldn't recommend buying anything yet. When they come in and do the webinar, they're going to offer a 50% discount on their product. And their product, I don't want to say it's extreme, but it's a little pricey. Pays for itself to my iron, prove that right off the bat. But saving 50% of that, if you just wait for their webinar. I do have an affiliate link on my website, though, if you go there. If you're in such a hurry, you don't want to wait for them. I myself am a technical person. I don't need someone to give me a walkthrough to be able to use their product, but I know others might. So I was pretty excited. They reached out yesterday and confirmed that date and time. So that was pretty good news. It's a big deal. So if you want to sign up early, just head over to the website, click on it. And for those of you who are not at the Bullish Bears yet, there's your link. Click that, follow it through. Come over and hang out with us in the Discord when we put these automatic systems back into place. Automatic trading is nice. It takes all the technical analysis out of it, and you put the trade on because. I'm not going to get into the conditions for the because right now, but it's a pretty simple process. Once you have it built, it's a pretty simple process. You just realize the conditions are there and you pull the trigger and take the trade. All right, significant liquidation break in gold. Bitcoin is another one that has been maintaining the range, although a wee bit wider to be sure. Notice it did not participate yesterday. Getting a little bit of a movement here this morning with the bonds. I'm not looking at any of this as if it's telling a tale. Because we still know it's CPI beyond anything else, first and foremost. So what we really want to game out is what to trade if it's bad, what to trade if it's good, and since it's something literally that everybody is waiting on. What if it's nothing? We don't go up, we don't go down, it's not good, it's not bad. The data isn't always clean and clear and simple. It could be some muddy waters where they're left waiting on the nerds to give them an idea of what they should do. So don't discount the idea that we could actually do nothing, because it's on the table. We have a potential red to green setup because of the significant move to the downside yesterday. So if you were to look at high beta names, say like Tesla, and the news was positive, if we expect the S&P to move 2.5%, and Tesla has a fast beta of 2.5%, you're looking at the possibility of Tesla making a significant move. So you'd want to start gaming that out, especially since the red to green will have already set up by the time we open. So if we get good numbers and we see the market make that move to the upside, the way the red to green is set up is we want to actually see the market get higher than the previous day's open before it opens today. So for a lot of names, it's not going to make the run, right? It'll be too far away. We had a pretty good size move yesterday. Generally, that's when we run the Google play or like the Amazon play. Very large, very significant move to the downside. We usually run a play that puts a credit spread on up here or a back ratio and says it's very likely that you won't make it back up that far in a single day. Of course, we didn't put it on because of the CPI. But if we're going to have positive and we come into the open, we can get above that level that primes us up for a red to green. We could see a rally or a run with that red to green setup. So you're going to want to be thinking about, well, what's that play going to be and in what markets? I don't think any of you are going to be surprised that there's not much change out here while we're still waiting on these numbers. So like I said, not a whole lot of technicals to go behind it. Even after we get these numbers, we've still got a large econ on the horizon. All right, so you kind of take it over into the new week. And Thinkorswim and all of its awesome sauce. Come on, there you go. You can see there next Wednesday, June 15, FOMC announcement. So even when we do get the CPI numbers today and we get a move off of those numbers, we're going to be moving right into a new week where everybody yet again is going to be waiting for the FOMC. But I don't think they're going to wait as much as we normally would. Right? The Fed has been very clear about June. And they've already priced June in. They've done a really good job with July. I think the September is really the one that everybody's kind of getting hung up on. But you still have to consider that, right? That even if the CPI is good today, you're not going to want to go out and just load the boat with a bunch of trades in a swing trade for 30, 60, 90 days out. All right, the EVs that are up this morning, along with the crypto, and pot stocks aren't bad. It's been energy and finance, guys. It's been the easiest and the most consistent thing to trade, providing opportunity on most days. If the CPI in some way doesn't galvanize us into a break up or a break down, I'll very likely be coming right back into energy and finance. Simple enough. That's what I got for you guys this morning. Be careful, be safe. It is my day to stream at the Bullish Bears. So I will see you guys in there at 9-ish.